We start with our interview segment and get some insight into a major development in Kansas that will affect virtually every taxpayer. After years of debate, the state legislature has finally overturned Governor Sam Brownback's income tax cuts and instituted across-the-board tax hikes. Supporters say this is necessary to overcome the state's budget shortage and to meet the state Supreme Court's mandate for more school funding. Here to talk about details of the program is economist Michael Austin with the Kansas Department of Revenue. Michael, thank you very much for joining us.
Oh, thank you very much for having me. I really appreciate it.
So you don't get either credit or blame for the new tax bill.
Oh, you know what? I'm an economist. My role is simply to judge economic environments and see what that means for Kansas and in particular tax revenues at the Department of Revenue.
So the Department of Revenue in Kansas, is that analogous to the IRS at the federal level?
In a way, the IRS contracts with many state government agencies in order to carry out specific tax duties for state governments. So yes, that most certainly can be considered.
And talk a bit more about your role as an economist with the Department of Revenue.
Sure thing. So of course, the Department of Revenue monitors as well as brings in revenue for the state government. My role is to look at state, regional, national, and maybe even international economic trends and try to discern what that might mean for Kansas tax revenues that are going to come in.
Okay, let's talk about this new legislation, this new law that was just passed by the legislature, I think, last week. Tax hikes across the board. When does the new bill, the new law go into effect?
Well, just like you already alluded to, the tax man is coming, and he's calling on Kansas taxpayers to pay about $1.2 billion in new taxes over the next 2 fiscal years. And Kansans most certainly need to know how those taxes will take effect and how they can better prepare for their budget. I think one of the most important things to know about this bill is that for Kansans who own a personal business, they will have to pay state income tax on that business
The
income.
LLCs, the limited liability corporations.
Right, so it's maybe known as the LLC exemption or the LLC loophole. That's no longer going to be gone. Another key aspect to consider is that for those Kansans who don't own a business, so for those who make a living earning wages, they're going to see a tax increase as well. We currently stand at a 2-bracket or a 2-rate structure, 2.6.
We're going to
4.7.
3 now, right?
That's right, but not only going to 3, but also we'll be paying higher rates. And the cherry on that pie, so to speak, to consider also is that all this happens retroactively.
Okay, let me go through what I have in the way of the rates, and you tell me if this is right or wrong. For married couples, a 0 to 30,000, 3.1%.
That will take effect tax year 2018.
Okay, and for those who earn 30 to 60,000, that's going to be taxed at 5.25%?
That's correct.
And above 60,000, it's 5.7%.
That will be correct.
Okay, this question, are these new rates higher or lower than they were before the Brownback tax cuts?
On a technicality, they are lower. The tax rates in 2012 were, I believe, at 3.5, 6.25, and 6.45. But I think an interesting aspect to understand about these rates that'll take effect in July is that even though the law is to hit the books July 1st, those new tax rates are going to take effect all the way back to January. What that essentially means is that even though you've already withheld tax from your paycheck for the first 6 months.
That's not enough.
That's right. And you'll have to catch yourself up in the next 6 months, and that could mean a pretty penny.
There are some deductions people can take.
That's correct.
What are they?
So we have 2 changes on the itemized deductions as well as the child care and dependent credit. The itemized deductions are for mortgage interest and property. They will go up starting in tax year 2018. And then we have the child dependent care credit, which was in place pre-tax cuts, but now will be restored, and it will take about 25% of what you can file on the federal return.
So if you read newspapers, not only in Kansas City, but around the country, even around the world, you will read that what happened in Kansas proves that tax cuts will fail and you can't increase revenues and get more people to move to your state and get more people employed by cutting taxes. And yet, it seems to me, from my limited experience, other states do that and succeed, and the federal government did that in years past when Ronald Reagan was president.
I hear that argument a lot, but I think one thing you have to consider is that the Kansas economy just doesn't work in a bubble. It doesn't work in a vacuum, and it's not just Kansas, it's Missouri, it's Oklahoma, it's Nebraska. The world doesn't operate like a lesson we have in the classroom. There are so many factors that can hit an area economy all at the same time. In Kansas's case, we'd had global ag and energy drop in 2014. Our manufacturing industry has yet to really recover from the recession, and yet the tax cuts only took effect a year prior.
And yet, has spending decreased over the years of the tax cuts?
On a technicality, spending has not decreased, but the growth has been slowed.
Taxing, even though it's been lower, the spending in the state has been higher, has it not?
That is correct.
Okay. Is there a website you can mention or someplace people can go to get more detail about the new law?
Of course. You can visit our website at the Kansas Department of Revenue, www.ksrevenue.gov. Not only that, you can, of course, follow me on Twitter. I always tweet about what's happening in Kansas, both through an economic perspective as well as tax revenue. And I believe we also have information that we can share here with you on Ruckus.
So there's no shortage of places people can find out about the new tax bill. Thank you very much. Pleasure meeting you.
Thank you so much.
That is economist Michael Austin with the Kansas Department of Revenue. Now let's meet the panel and start a ruckus.